Hey everyone, this is Josh here with Invest with Matt, and today I want to start a new series called The Price is Right. The first one I'm going to start off with here is Robinhood. This will be the Hood edition. I want to do this to kind of go over things. I know everyone likes to talk about kind of forward guidance, what their expectations are, um, kind of where the stock is now, based off of previous earnings and what they think forward earnings are going to be. But we'll use this series to talk about this and other stocks relative to things that aren't priced in already. That's where you'll find the alpha for most stocks. Robinhood is a very well known quantity at this point, but there are things I think that are worth discussing that are not priced in for them yet. But before I get into that, I do want to talk about some other trades that have happened since probably my last Robinhood video. The first one I want to go through is the disaster that was the world Liberty financial crisis, is one way to put it. So, this is the chart right here of alts, which is the Treasury company for World Liberty Financial. You can go back and look at my previous video. I did some write ups on it. So I actually entered this, if you don't already know, and I'll try to keep this short because I know most people are probably interested in Robinhood. So I bought their governance token at 1.5 cents like last October, November. So I had those for about a year. I did get to sell my 20%, and I did exit those pretty much immediately once the rumor mill started churning about the number of tokens that they were actually releasing into the circulating supply. Everything that I like calculation wise was based off of 5 billion tokens coming out. And that was, based on what they said and what they had told the public, that it was only going to be 20% of the pre-sale holders. Well, it turned out it was much more than that. It was actually closer to 25 billion. So 5x that amount. My targets when I was looking at the 5 billion, I was thinking like 2 to 5. But if you divide that by 5, really you're looking at a peak value of 40 cents to what, $1. And that's really that's what we got. It peaked at 40 cents and immediately has cratered. I don't even know where it was at now. Last time I looked, it was like 17 cents for the actual token. Alts is the treasury that tracks that. So all the calculations for that were also based off of 5 billion. It's at $4 now. And I got out of this the morning in pre-market after the release. So Tuesday morning, because it was released on Labor Day, Monday, where people couldn't actually get out of the position, which was even more fucked up, especially for those that had options. So I got out of my shares that morning in pre-market at like 7:15. I posted that on my X at Oshawa Hill if you want to check it out. And you can look there or on YouTube at Invest with Matt for my other videos that I've done, including this one. So it was definitely a catastrophe. I don't know if I would say it was a rug pull. I guess it was. It was more of a misleading information given by none other than the Trumps. Surprise, surprise. So a lot of people lost their ass here. I actually made money off of it just because of the pre-sale. I didn't lose money on the shares. I got I think I made like 150 bucks on those because I basically got out at break even. The options I did lose money on, just to be transparent, a couple $1,000s on those because I couldn't get out till open, and I sold like immediately at open. But I made off my 20% that I was able to unlock. I made about $38,000. All in all, it was a really good trade. A little bit of luck because, right, nobody knew that they would ever unlock the governance token. My logic was, well, this is the Trumps. If they think they can do it and get money out of it, they will, and they did. But yeah, I feel bad for anyone else that bought into this after launch and wasn't a pre-sale holder, and then anyone else that got trapped in this alts trade because of it being on Labor Day when they launched the token and they were stuck in it. And by the time they could get out, it was too late on Tuesday, really, because this thing, you can see the open on the second here. It's this big candle. It popped and then it's been downhill since. It had already started dropping overnight session. because Wilf was dropping the governance token. So that's what happened there. That sucks. The other one is TSSI. I actually still like this stock. I currently don't hold any anymore. I got out when it broke 18, which is where I thought. You can see it consolidated there a while, 17 to 18, and then it finally broke down. It kind of came up to retest it, and then it's just been downhill ever since. A lot of this was Dell earnings, because there's such a adjacent trade to Dell, because Dell gives them all of their revenue, more or less. All the work comes from Dell. Anything bad news for Dell is bad news for them. And it was already not looking great because they were not getting as much work from Dell as people thought they were going to, given their guidance earlier in the year and their Q1 that they had. Q2, which is up here, where you see the initial drop, was just disappointing. It came in way lower than people thought. They were expecting, the 700% revenue growth that they had saw in Q1 to somewhat continue, and it actually went down like to half of that. And since then, it's really traded down into this range, and I need to go out further than this. I don't really need the 5-year, but 5-year looks crazy. But you can see it's trading down into the bottom bands of volume profile for the past year. This is probably not a bad spot, because this is where it consolidated for a little bit after earnings. And it's also kind of an area where there was volume, on the initial run up last year when they had a good quarter in 2024. And then they did something similar where they had a couple of good quarters in a row last year, and then they had a one-off quarter that wasn't great. And so it kind of cratered. But they were still positive revenue throughout this whole time. And they showed that in Q1 that, the demand was still there for data systems integration and procurement. Well, their big move after Q1 was moving more towards data systems integration and less so into procurement. And I think they did that because the writing is on the wall that procurement is just not going to be a consistent revenue stream for them. And they're kind of at the mercy of their vendors for that. So quarter to quarter, it's going to vary a lot, and that will spook shareholders, which is really what happened here. Procurement was like a third of what it was. Data systems actually went up, which it should, because the new facility is all geared towards data systems integration. And you're like, well, why are they focused on that? Well, the margins are so much higher. So you can go back and look at my older videos on YouTube. I probably haven't posted the X2, and my Substack, if you want to go there, invest with Matt, that they want to move to something that they can actually control, like the data systems integration, like that. A lot of that work is still going to come from Dell, but it's higher margin. So it doesn't hurt them as bad, because procurement is really thin margins. If it's not there, like the work isn't there, they're just not going to make any money. Like in net income, like the revenue, I mean, they're only making like 4% of the revenue is they take home. The rest of it is costs get eaten away at that. Whereas data systems integrations over 30%. So you're looking at like 10x better margins in that segment. And that's why they want to move in that direction. I will say that even considering that, like, it's trading at 1x forward revenue for this year. Like if they do hit 75% EBITDA in the second half of the year, they're going to make $300 to $400 million this year. And right now the market cap that it's at is like 350 or 360. So their market cap's 1x rev for an AI infrastructure play. It seems super undervalued, but everyone that I know that I talk to in Wall Street, I believe as well, are really concerned about the Dell aspect, where they only have one client that supplies the majority of their work, and Dell just built out a facility. I think that's 5x the size of TSSI's new facility to do similar work. TSSI really wants to focus on more specific, unique type data systems integration. Dell, I don't know if they will cross. I would imagine they cross over some into TSI segments. So the work that they would be sending to TSSI, they no longer have to. If that's the case, that even the data systems that they were anticipating being, their revenue driver going forward may be weaker. If that's the case, then I mean, I wouldn't be surprised if it went back to $7. Like that's where they would be trading if they were at their current levels, revenue and PE wise, and they had no growth. If they were just flat growth quarter over quarter going forward, then this is like a $7, $8 stock. I don't think they will be. They already gave us guidance through the end of the year. I really hope they're not dumb enough to like give us really good guidance like they did and then not come through. Usually companies do the opposite of that, right? They sandbag guidance and then they beat. So under promise, over deliver type thing. Well, their guidance was the only good thing about their earnings call in Q2. So if that doesn't have follow through, then this gap right here down to $9, I could see it getting filled. It's already come so far down here. Like today it tapped 12 that, I mean, I almost kind of want it to come fill this gap and be done with it. Like form a new base at $9 to $10, fill the gap. And then at $10, I think I'm a buyer again. Like I really want to buy now, but I'm going to wait. And if I miss that, I miss it. But I want to see this gap fill first. And if it fills and gets back to like 10, I'll probably buy if it stabilizes before Q3 earnings. Because if their guidance was anywhere near right, Q3 should be a great quarter for them. I mean, they're to meet what they forecasted for the rest of the year, it's going to have to be significantly better than Q2. I don't know if it'll be as good as Q1, but it has the potential to be. And if it is, then this stock needs to be over $15 a share, in my opinion, if they hit what they gave us for guidance through the rest of the year. So if you can get it at 10, I mean, that's a 50% increase for, 6 month on a 6 month time frame. That would be killer. All right, but that's it. Those are the two main things, the good and the bad. Let's look at Robinhood, and today we'll cover just what is not priced in. So price is right here, right? You think $100? I think it's pretty good valuation wise. I know the PE is still pretty high. Let's see, daily driver. Yeah, I'll look at that. Let's see, where is it at right now? I'm still getting used to Legend. I'm so used to just looking at it in the app on my phone for just generic things like the PE, the shares, the market cap. So it's sitting around 92 billion market cap. The PE is 51. It's pretty high. But if you go back again to my X in here, let me show you. We can take a look at a couple of things here that I've shared in the past month and a half, probably. Two of the main things that I went through were what I think Q3 revenues would be, which I'm expecting 1.3 billion in revenue for this quarter. Most of that's driven by crypto. All right, let's see this bad boy. And we'll start there. We'll start with crypto and why I think, and I don't know, this isn't going to be a shock to anyone. So looking at crypto revenues, if you could see my screen here. So this is aggregated. I've been through this in other videos. Aggregated crypto price to volume. So whatever the total volumes were over this period, which for this is year to date that I'm showing here, and the price. So multiply those two together, and it's basically just showing you a line graph of every single day since the start of the year, what the aggregated price times volume is for their main traded cryptos, so Bitcoin, Ethereum, Dogecoin, XRP, and Solana. Those are the highest volume trades. Now there's one-offs like this spike here was around when Trump coin came out, but I think that was a general market. Like I don't actually have Trump factored in here, but I'm sure they had higher volumes on that coin that day. But for most days, these are the ones that are going to be their highest on platform volume wise. So they'll have the biggest impact on the actual revenues for them in the crypto segment. And you can see here, it's pretty clear that you're looking at since July, which is the start of Q3, you're having a steady, like you're not seeing these big spikes like you saw in January. And if you went back and looked at Q4 of 2024, when they had that massive quarter in crypto, you would see something similar where you'll have really big spikes. But the lows, if you look in this range since July, there aren't like it's so much, it's like double on average over a longer time period here. Like if you look at early March to July, like nothing happened, and that showed in their Q2 earnings. Like crypto was way lower than Q1 and Q4 of last year. But August and July are actually higher than Q1 so far. So if you take the area under the curve, which is just the percentage of like literally the area under this line from the start of July to where we are in August, or well, this was to the end of August. I guess there's been 4 days since then. I haven't factored in September yet because it's still early. But if you take that percentage is higher on average than what we saw for Q1. So that means that their revenue, their churn in crypto is going to be higher, not just because the price to volume is higher, but also because their take rate is like 20% higher than it was in Q1. I expect, and we can go look at the other page I have here, if I can find it. I have so much content now. And then we can talk about prediction markets. But this is what I don't think is fully priced in right now for Q3. There's my older one. I have a Sankey chart somewhere in here, I think. Here we go. So look at this. This is showing crypto, what I think it'll be this year based off of my price to volume and their take rate, which is around 0.82 right now. And on average for the quarter, it's been around 0.8 percent. So for every trade, they're taking 0.8% of that. And I think they'll eventually get up over 1%. So there's still room to grow here. I don't think the market's pricing that in fully because Coinbase is around 1.2, 1.3%. So Robinhood has a lot of room to expand revenues in crypto, even if volumes don't go up, but they are going up and they're expanding take rate. So it's going to be a double whammy. I think crypto is going to come in something like it was. The volume won't be as high, but the take rate is higher. It's going to be something like it was in Q4 when we saw 1 billion in revenue. The difference this time is not only will crypto be higher, but looking at the other segments for what they've given us so far year to date and what they've given us so far in Q3 for notional volumes on options and equities are both higher. We know that instant withdrawal is growing. We know that gold memberships are growing. We can kind of forecast what the rate will be based off previous quarters, which is what I've done here. We have proxy, which is like other non-trading revenues, and net interest, which is going to be very high still because rates really haven't changed at all. I guess they're getting ready to, but they're going to have very minimal impact on Q3 because by the time the Fed does their cut, Q3 is going to be mostly over. So I'm not expecting to see that reflected in this earnings report really. And we know their OPEX is about the same. Like it never really changes because 90% of their costs are fixed. And they are getting a tax break this quarter. I think the market has that in. I looked at Seeking Alpha and their revenue expectations has crept up to 1.1 billion. I don't know if they're including this tax break, but Robinhood is going to get a tax break of like around 100 million this quarter. So their net income and their APS are both going to be much higher. The street is looking for, I think, 0.6, 0.55, something like that. I have to go look. Let me see. Seeking Alpha. Just bear with me. So I usually use Seeking Alpha, but there's other sites, and most of them have like around about the same thing. So they're actually only expecting, 1.1 billion in revenue, but they're only expecting 50 cents in normalized EPS. I think it'll be higher than that because of this tax, the tax break that they're going to get this quarter. So I'm actually expecting around 0.74 diluted EPS based on, well, I based that on $911 million or 11 million shares, but I think there's actually fewer shares now outstanding because Robinhood has bought some back since the last quarter or the last half a year. But you can see here, it's pretty clear. Like this is going to set up to be, it's whether it gets to 1.3 billion, I don't know. That's what I think. Even if you take out the tax break, I'm looking at 1.2. The street's thinking 1.1. Either way, this is going to be their best quarter ever. So at $100, I don't know that this is reflected, especially with that EPS. Like if they do get the break and add it all into this quarter for their taxes where they're actually getting money back, their EPS, along with the crazy one that they had, I think in Q4 of last year, where their EPS was like 1, their PE ratio is going to fall a lot at this level. And they're growing, right? So they deserve to keep the multiple. So if the PE is falling, but they deserve to keep the higher multiple because they're still growing, then the share price is going to have to go higher. I mean, it's the only way it'll make sense. Right now at $100 too, I also think that the other thing that's not priced in right now is S&P inclusion. I think we saw last quarter and leading into some of the decisions before IBKR and some of the others got in coin, when Robinhood was looking like a top contender for a financial company to get in and a brokerage to get in, that this was trading closer to 120. I think 10 to 20 bucks is the premium you get, which is 10 to 20% if they get included, just because of the buying that has to occur for these indexes that have to add them. I have a video on that from, God, it's been like a year now since I made my S&P 500 video for Robinhood and what it can mean for the price. I thought they'd get in possibly by then. I thought for sure they'd get in by now. There's been some questionable companies that have gotten in. IBKR was not one of them. We can look at that too while we're here just quickly, because I originally, like, my knee jerk was to be upset about that. But they look a lot like Robinhood when it comes to their numbers. And it's really pretty impressive for IBKR. I know this is an IBKR video, but it does have Robinhood data here with it. So you can see here their revenue, they're much bigger because they're multinational. They got a lot of the overseas market that Robinhood's just getting into. And Robinhood, they're only doing tokenized securities, which I guess they'll have to for now overseas. Net income in millions, like other than the one quarter where they got the huge additional break in Q4 of last year and they had the crypto boost, IBKR runs at a similar growth trajectory to Robinhood at a higher value of net income because they generate more revenue. Their net profit margins are actually better, but you can see they are kind of growing together. So I don't know. I think at some point they'll level out and be about the same. Rule of 40 for both of these is honestly, for brokerage, is truly impressive. They've both, for the better part of 2 years, run over, and I know this is not a software company, but it's just a cool metric to look at. They're both running over that and have been consistently for 2 years now since we've come out of the bear market in 2022. And then you can also look at Robinhood has a better cash to debt ratio. That's one of the few things. Stock based compensation, they actually have a higher percentage, but it's a younger company. And then EBITDA in millions, you can see they're both steadily growing. IBKR is just a larger company. So that was fine. It was like the Williamson Sonoma, the trade desk. Like, let's look at trade desk. What is that dog shit doing right now? Like, they put this company in. Look at that. What a joke. Look at this island reversal here. If you're into that TA nonsense, this is them adding them, and then just the like. Let's check out Williamson Sonoma. See how they're doing. Actually, not terrible. I mean, they're holding up better. A lot of the retail and the housing type stuff is doing well right now, which is confusing because people were expecting for housing market, and with jobs being like they are, you would expect this to be weaker, but it's not. Did they report today or something? They went from 188 to 202. Let's see. That's crazy. They must have reported. They're up like 5%. Yeah, earnings beat a day ago. So they did report a couple of days ago. Wow. Okay. Well, kudos to Williams Sonoma. The trade desk, you still suck. All right, go back to it. Anyways, S&P is clearly priced out now. I think back here is where it was being priced in, but now that we have those additions that kind of fit the Robinhood mold, the likelihood of S&P adding them at this point is pretty low. I'll be surprised, but who knows? A couple quarters, last two times they've added people, I thought they'd get in. So maybe I'll be pleasantly surprised this time and they'll actually get in when I'm thinking they won't. But that's been priced out down here. It would be closer to 120 if they were in the S&P. The other things other than the earnings that I think the market is just lowballing by at least $100 million, which is no small amount. I mean, you're talking about they're like 10% off right now if they don't raise again before earnings, which they probably will. We've seen it previous quarters. They'll keep revising up until we get to earnings. And then they may even have like some impossible number like 1.5 billion for them to try and beat. The other thing that's not clear to everyone and it's not priced in, and maybe we'll get color on that in the earnings call, I think we'll have to, is how tokenized securities is going in the EU. So that's a whole new market that really it's not been there but for a quarter now. So I would want to see, and I don't know if they'll break it out in their 10Q or on their earnings call. Maybe somebody will ask them about it if they don't break it out from the rest of their trading revenues. But I'd like them to start showing a geographical representation of like what the revenues are in different geographies, kind of like Nike does. This is what our sales were in the US. This is what our sales were in China. This is what our sales were in the EU. I like Robinhood, especially once they get Singapore online and, maybe one day Canada. I'd like to see them break out revenue segments into different geographical territories. And because that's really where the new growth is going to come from. I think it has to. Yes, they'll continue to take market share in the US, but a lot of that, in my opinion, is further down the road. Boomers who have a lot of wealth that is going to get passed down, and everybody's talked about it ad nauseum now, the great wealth transfer. Well, it's probably still like 20 years out from getting like into the thick of it. I mean, people live forever now, and medicine and medical care is just getting better and better. So that's not an immediate, addition to the revenue, right? That's not something that's going to be priced in now. Like it probably is to some degree, but like we won't know what the real ramifications and impacts will be of that wealth transfer for at least a decade. So I don't think that's not really priced in. I think what could be though is if they start showing growth in the EU, or if they get into Singapore and we start getting 3 or 4 quarters in a row where they're showing like a significant growth, because those are the roadmaps for Canada, for whatever other countries, South America, wherever else they would choose to expand, that, outside of just crypto, because, you can do those things in a lot of those countries already. But for equities and options, the rest of the world, a large portion of the world is not exposed to those things. Like, options are a very American phenomenon, and that's a lot of revenue for Robinhood. And if they can figure out a way to get people hooked on those things in other countries, along with sports betting, which, we really haven't seen a full quarter of them ramping up heavy sports betting. This will, I think, be the first one where we might start to see a turn up in growth there. That's another thing that I want broken out into different segments. And I want to see that growth split out from the rest of their revenues so we can see what kind of trajectory it's on. And if we can get that, and I think they will at some point, I don't know if they'll wait for it to get like more mature before they start showing it. But I think if they do, then it could look really good for them. And this is just from a few weeks ago at the start of week 1 for the NFL. And this was just right after they rolled it out. I was looking at it today for week 1 and week 2. These numbers are so much higher now than they were just, when did I do this? This one was posted on the 22nd. So yeah, like 13 days ago, 2 weeks ago. I don't know if Robinhood is showing if it's theirs and Couchy's that's on their platform, or if it's just theirs. Either way, I guess if you split this in half, well, no, they're paying 1 cent, and 1 cent goes to Couchy, and that's their 2 cents that they take. So even if this is all of them together and not just Robinhood's, half of it, I'm only taking into account 1 cent per contract. So this is probably like a base case. So $500,000, it doesn't seem like a lot, but this was before the first football game even kicked off this year. A lot of the betting comes in the day of. So tomorrow, like if you go look at your Robinhood app right now and look at the top game, like contracts wise, if you look at the top right corner of the contracts for the sporting event, you'll see the number of contracts traded. Take a picture of it, or take a screenshot, and then come back tomorrow at kickoff around 12 o'clock, 1 o'clock Eastern time in the US, and look at that same game and see what the difference is. People who haven't done sports betting before probably aren't aware, but a lot of the trading happens during the game and right before the game. So tomorrow I expect this to be like a crazy number. Like I could see them easily generating tens of millions of dollars in the next year annually. And I think once they get to a point where it's fully developed and it's mature, like a mature market for them, similar to what options and equities are now, and I guess crypto really is mature for them, I think it can be another $100 million type thing, right? I think the annual revenue, I think they could be doing 25 mil a quarter on this. And that would be just another feather in their cap, pun intended. Right. And another thing that happened today, so I don't think sports betting, I don't think the S&P, I don't think what they're going to report in Q3, I don't think that tokenized securities, because we don't know enough about them yet. I don't think any of that's priced into Robinhood's growth trajectory. I don't think it's priced into it right here at $100. And one more thing on tokenized securities, and I've talked about it in other videos. The margins for tokenized securities are more akin to crypto than they are to equities trading right now in the US. If ever there comes a day that Robinhood tokenizes all of their trading that takes place on their platform, probably equities first, and then at some point in the future beyond that, options could even be tokenized because they're a contract. And blockchain is literally for contracts, smart contracts. You could do that type of trading on the chain too. And instead of them getting a couple of pennies for each trade that happens, they could take, 0.5%. And you probably wouldn't see a whole lot change. The spreads would be larger, I would imagine, so it might be a little worse. But a lot of that is just costs that they're not having to pass through some intermediary. So like they're not having to route through an exchange or use Citadel or whatever it is that they do, payment for order flow. The money that they lose in the process of that trade taking place, it would just disappear because it would be on chain and like the cost to them is really minimal. So you could see a 10x in how much revenue they actually generate from options and equities. And instead of, crypto being their main driver for how they make their revenue and why their margins are where they're at, it would be options and equities as well. And that's not priced in because if you could tell me that instead of making, $100 million on equities in a quarter, they can make like $500 million on equities in a quarter. That absolutely ain't priced into to where they are right now. You'd be talking about $2 or $3 billion a quarter, you know, in a few years instead of 1 billion. And this would need to be trading at, I don't know, 200, $300. And I have a video on Robinhood and how it could get to $200. And that's part of that discussion on how it could get there. And then the last thing, we talked about sports betting, we talked about tokenization, we talk about expansion. I'm trying to think if there was anything else that I want to go over for Robinhood today. Oh, crypto. So the news today, and I think I did have a post on it from earlier. Oh yeah, and I'll be at the summit. So anyone that's there, I'm going to try and get up with some folks. I know a few people that are going, and I want to meet them in person. So if you're there, find me. You know what I look like. You can just say meh. If you see me, just yell it. And we can talk bullshit about life and in Robinhood if you want to. So here. So the news today for the NASDAQ, right? They are tightening their crypto rules. And this is kind of full circle to go back to where we started this video with the WILF, World Liberty Financial bullshit, and the alts collapse for their treasury. So they are going to start restricting treasuries. They're not going to let them just dilute shareholders without some kind of vote occurring first. They're not going to just do capital raises. Like, MicroStrategy has been well known for when the iron is hot, they strike. They do a capital raise. When their NAV is overpriced, they take that equity out of the stock, they buy back more Bitcoin, and it's just like this self-fulfilling loop. Alts and will for that, but to an even more extreme degree because the same player was controlling both sides, the treasury and the token, which is a huge conflict of interest, and the SEC should probably investigate them. But that's a deeper conversation. I'm sure there's some videos out there where people are already talking about that. But I think that's part of why this occurred today. You're seeing a lot of treasuries companies come up, and they're not just doing Ethereum like BNMR and Tom Lee or MicroStrategy and Bitcoin like Michael Saylor. There are people getting into these small, like illiquid coins like World Liberty Financial. They're sketchy and people are investing in their company. And like these companies, a lot of them weren't even crypto companies to start with. They were something else. Like Alts was a biotech fintech company, and they just randomly started this treasury. It's a money grab and it's a giant scam. And I think that's why the NASDAQ is cracking down. But to get to the point I was making, I think this could potentially push people who are investing in these equities back into crypto. So you had people who were looking for a higher multiple return. So instead of buying Ethereum that might go up 5 or 10%, they would buy BNMR and it could go up 30%. So it was like a leveraged bet on crypto. But if they start nixing these treasury companies, I call them TCOs, and they start making that process where they can raise capital immediately to then turn around and buy the crypto, and they make it a more painful process. I think you could see some of definitely the smaller ones will falter. And I think some of the bigger ones, because the name of their game is really being able to do this quickly. And they slow down this process and make it harder for MicroStrategies and the BMRs of the world to do these dilutions and purchases. I think you'll lose that leverage type play on these, and people will move out of them and back into actual crypto. And that's good for Robinhood, because Robinhood doesn't, I mean, they want people trading equities and options, but that's not where their margins are. Their high margin is in crypto. So anything that pushes people out of these equities, and maybe they weren't in crypto before, but maybe now that they've traded these treasury companies, they're more comfortable with the idea of crypto. So this might actually push them into just, hey, I'm not getting any premium here on these stocks anymore, but I want to be exposed. What if I just go and get direct exposure to the asset class by going on Robinhood and buying Ethereum or buying Bitcoin? That way I'm still in the game, but I'm not dicking around with these treasury companies that NASDAQ might hit with some compliance letter, any given day. So that was a new development. I don't think that had anything to do with the price action today. It was a good day for Robinhood. I think it was up like 4% at one point. It was due for about, I don't think it should be down here at $100, honestly. I mean, I could see it, like, especially if the market rolls over in September, I could see it going to $90 again, in the high 80s, like this wick down here, this area. What is the range on this area? Yeah, 90 to 95. Like, I don't think you'll fall back down to 85, but maybe high 80s at worst case. Either way, it would be super undervalued there, given the potential and what is coming down the pipeline for them. We do have the event, the summit, like I mentioned earlier, next week. I think a lot of cool stuff will come out of that. I'm really looking forward to banking at the end of the month. I think that's going to be another catalyst. I don't think they get in the S&P 500 Friday, but that's just another thing that's out there that could push this back higher. I'm trying to think, beyond those immediate near-term catalysts. There is also the August metrics that'll come out probably next week sometime. I think they're going to be staggering, honestly. I think people are going to be freaked out by what they see, like how good things look for them right now in this quarter, 2/3 of the way through the quarter. If September could just not fall apart for them, and even if September did fall apart, and if we got a quarter we got a month like we did in May or June, it's still going to be a really good quarter, and it'll still be over $1 billion in revenue. It just won't be 1.3 billion. It might be 1 or 1.1. So that's what you have to look forward to ahead of Q3. After we get past this week, next week, the summit, the data for August, and the S&P decision, really there's nothing going on for Robinhood until Q3 earnings. And that's where I would keep my eye out until then. So Robinhood Q3, I think we covered everything that's not priced in right now. TSSI, again, another one. I think they'll have a good Q3 unless they were just wrong about their guidance. And if it gets low enough before Q3, which it's kind of getting to now, especially if it gets to like $10, I think it's an easy trade into earnings, if you have any faith in their management at all. And if they don't get it right this quarter, I think they're done. I think that one's done. I'll move on and not care about it anymore. We'll see there. All right. If you made it this far, thanks for listening. 45 minutes, not too bad. I'm really excited about next week. Look forward to seeing everyone. If you're there, give me a shout. Again, like to meet you in person, like a human, and not on the computer. But yeah, take care. Happy trading. See you later.